Two, and I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Current overnight position disclosure. I got out of pins today, which I'll certainly keep an eye on to get back into. I like the company. Day traded a bunch of names today. But the market really didn't end up doing too much by the end of the day here. Let's start with the 5-minute real quick, actually. So how'd we close? As of right now, I'm looking at the SPYs down 0.1%, the Qs exactly flat, and the IWM down about 0.25%. So pretty light, flat type day. You can see here in the intraday price action, we had this opening uptick for the market that then got sold as it should. I wanted a little bit more to the upside to be aggressive on the short side, but it did give us a little bit of a technical signal to short at highs. That's also when the PMI number kind of came out. That gave great follow through to the downside as the PMI came in light, which I guess the market viewed that as bad because it's not good for the economy. And that's you know, one of the things I'm really going to be paying close attention to now is there going to be a narrative adjustment now that the market is finally really taking in the fact that the Fed is going to be doing a bit of a pivot here? Is there going to be a market adjustment, which is what I've been looking for, where the main story of the market begins to slowly adjust from the Fed pivoting, interest rates, and inflation to economic damage? And what we've consistently seen for a bit now is whenever we have, really bad economic numbers, like normally it's not a good thing when there's like less people working or there's any signal of an economic slowdown. Usually that's bad, but the market's been rallying on that because that's been the goal, because it helps to bring down inflation. So I'm wondering at a certain point, and I do think this is happening or it's coming if it's not already happening right now, if we actually begin to go into an environment where bad news actually becomes bad news because the market's like, okay, they're winning the fight against inflation, but we don't want the economy to get too bad. So, just one number today. I don't want to overread it. The market was, overbought and extended to the upside even as that number hit, but we did sell off on it. The expectation on this pullback was that we wouldn't see any real downside follow through. I remember saying in the morning meeting, like 403.50 is my momentum line in the sand. I think Pat's morning note said 405 is kind of his momentum line that he doesn't want the market to, really get passed by too much. And yeah, we pulled right back to that 405. We pivoted there. Good job by the team. We called out some shorts at highs. Well, first we called out initial momentum longs and what was relatively strong, which was a lot of those FANG type stocks. Sorry, I'm just realizing I missed something on one of my trades here. Let me fix that. So first, we were looking for longs, and one of you guys put it in my brain in the morning meeting because it wasn't in my brain before when I was doing my own research about, thinking about looking for short squeeze type names today to be able to run. And it just made so much sense because that's what we tend to see in this market environment, right? Whenever these bull runs get pretty long in the tooth, which doesn't mean that it can't continue, that's usually when we start to see the short squeezes really come in. So it makes sense to me, and I've already been talking about it, the market giving that close above the 200-day for the first time in 7 months or whatever it is, and testing or breaking that kind of downtrend line that we've had on the really big picture will just cause more people to liquidate shorts. Well, where are they heaviest in their short positions? They're heaviest in their short positions in a lot of those growth type stocks that are out there. So it made a lot of sense today to expect, if there's going to be relative strength anywhere and we don't fully trust the market, to look at growth stocks to be able to do that. And a lot of those names gave great opening squeezes. So we're able to capture these upside moves. You can see that a little bit better in the Qs, but a lot of those types of names were squeezing early on. Then we called out the short here at highs just because we got a little bit of a signal and the market was extended on multiple time frames. You can even see here it's after 10 a.m. Just look how extended the Qs were even on their 5-minute chart, let alone the extension of the daily chart. Then again, we had the pullback, but right to the area where we thought it would. An appropriate percentage of yesterday's up move. I mean, a very small percentage of yesterday's up move, really. And that pivot kind of came in. There's a couple good longs there, like Netflix was called out. We bounced a little bit. I remember calling for profit taking into this bounce if anybody caught the long, because I thought that there was a good chance that we would go sideways. And that's what happened. We went sideways. And at least with the market, there really is not much to do with this price action. There were individual stocks that were moving, and I was trading a bunch of names that I don't really trade that much. Like I was long AMC, and I made money in AMC long at one point today. With the kind of squeeze that was going on, that was an interesting trade. And I hate AMC as a company. I think it's worth $3. I was long Affirm. I really don't like Affirm or Upstart very much as fintech companies. I like SoFi much better because it's a bank. I don't really get Affirm or their business model, but this thing is super beaten up, has a little bit of a support base here at 1250, broke up with the market a little bit yesterday, has a high short float. I think Elliott brought this name to the radar in the morning meeting, so that was something I was able to make a few bucks in off the open. Even some others that I'm not in anymore, like the Shopify, gave a great day too, even though I got out of it. Traded really, really well off the open. So just a bunch of good trades in these short squeeze names. Then, of course, next thing you know, they start waking up these meme stocks, Bed Bath & Beyond, which at this point probably belongs at 0, AMC, which probably belongs at 3, GameStop, I don't know, maybe belongs at like 15 or 20. They all started kind of waking up a little bit, but belongs doesn't matter. What matters is who's buying, who's selling, and what's making the market move. So again, made a few bucks in AMC, made a few bucks in, what was I saying, Affirm. The Coupang was another one for the open. I honestly found this Coupang to be pretty disappointing. I ran into a lot of selling, but was able to make a few bucks there. The one where I lost money in was Carvana. This is another one I went after that short squeeze information in it, because this one we know has a massive short float in it. I got in a little bit late. I kind of got in, I think, around this bar. And then I ended up kind of just getting stopped out right here on this candle for a loss. I think that was the only loss I had from a day trading perspective today, which I'll take it. And that's pretty much what today was about. It was about coming in. The game plan was, hey, we're extended but not so extended that we can't continue. 412 would be the area that I would love to get short, but we got a little bit of a signal below that. Let's see where the relative strength comes in. Let's see if they can give some short squeezing, and that was pretty much the focus. A lot of these other names were out of play. Financials were very relatively weak today. Your FANG stocks, didn't do much. This Apple daily candle is kind of meaningless to me. Microsoft didn't do too much. I mean, really, at the end of the day, this is a bullish consolidation. Because that short-term tactical sentiment was in the red zone coming into today, which is something we pay attention to, where you struggle to be able to get continuation. But I'm going to assume that short-term tactical is going to be out of the red zone from this digestion today, and will be even less extended tomorrow than we were today, because today was a rest day. So if anything, this is kind of a bullish rest day. It potentially sets us up for higher, and we'll see if we get like a 1, 2, 3 type of deal for continuation on tomorrow's trading session. Tomorrow is Friday. So that's all I got. We'll see how we gap tomorrow morning, and we'll put it together again, and we'll come up with a game plan. So otherwise, a slow day, I think, for the market, but there was a lot of individual stuff that was moving, and there was good money to be made today if you focused on the right stocks and really understood where your relative strength and relative weakness was. Oh, and I didn't even mention that Roblox trade. Pat just got that news out so fast on this candle about the I don't even know what it was, chatter that maybe Disney, I think, is going to look at Roblox or one other company. And the thing didn't even have like an uptick when Pat actually first called it out. I'm trying to remember what price I was able to buy. I got like $32.55 or something like that. Like before this thing even really started going at all, before any of the volume even came in. Just really good job getting that news out there for the team. I decided not to swing it. Maybe it's a mistake. I'm just being a little bit cautious on added overnight long exposure right now with kind of the market with where it is, and I still have plenty of long exposure if the market wants to give continuation. But yeah, I was able to get in that, covered my risk, just trailed this one all the way up and just liquidated it into the close. So yeah, really good stuff today, guys. Really good stuff, really good teamwork, really good communication. I love the teamwork because, again, you're putting stuff on my radar that would not be on my radar otherwise. And that's all I got. So I'm happy to answer any questions. What do these path numbers look like? Earnings, 5 cents per share, which is 6 cents better than expected. Revenue rose. They had like kind of pre-announced, so I would expect some of this to be into the stock, but it's up 11% after hours. That's path. What else do we have here? ASAN down. SAN down 12% after hours. CHPT doesn't look like it's doing too much. ChargePoint. PD. PagerDuty. Haven't looked at some of these names in a while. PD up 7.5% on its report. We got Zscaler. Zscaler trading down. Company issues downside guidance for Q4. Sees Q4 revs down small. Yeah, I'll look more closely at those ASAN numbers tomorrow. Josh saying that ASAN could pull a CrowdStrike tomorrow. That was a good trade from CrowdStrike that we had called out yesterday morning to the long side. Gave great follow through today. How did that snow end up closing? Wow. That's a nice turnaround on snow considering that it was trading down after hours. All right, from Mike Reed on NTNX. Yeah, NTNX was one of my game plan kind of this morning for a long verse, like the 29 area. Daily chart, it looks like it worked, but let's see if the intraday was easy or not. Ooh, some big opening tails there. Did this second tail break the first tail? Is that even real? 28.55 low, 28.55 low. Those are equal lows. This pullback's also a little bit uncomfortable, but then they really ramped it up. So I went long NTNX off the 9:45 minute candle. Okay. And it's sort of consolidated for 15 or 20 minutes before moving down and then up. Just wondering if you have any tips or things you look at when judging a consolidation, whether it's bearish or bullish. Yeah. So honestly, if I was in this NTNX today off of that candle, and I don't hate that buy at all, by the way. As a matter of fact, I don't hate it. What I mean is I like it as long as you're able to get a good price. I wouldn't want to pay up too much. It's a $29 stock. So like if your price on this is above $29, I struggle with that because you have the right stop losses all the way down to $28.55. So not only does something have to be a good trade, but the risk has to be appropriate to the potential reward. The daily chart looks really good, and that daily chart reward is could be solid if this thing is really breaking out of this pattern and going into a kind of a new uptrend. There could be a lot of upside on it, but I would still just be a little bit cautious in taking that much risk. So depending on what price you got, I either like this or don't like this. Pricing is important, but the setup otherwise I like. Now if I was in it off that and the stock was doing this after, I would be very disappointed and I would be assuming that my trade is going to fail, to be totally honest with you, which doesn't mean that I get out. I don't get out. Buy the ticket, take the ride. It's very easy to convince yourself to get out of positions because you're not getting the immediate gratification that you're looking for. But this is generally not what you're looking for. I know this is also about the time that the market was really deteriorating. So you could look at this and be like, well, the market was getting smoked and this thing, yeah, was grinding down, but wasn't like getting smoked in the same way and breaking new lows. So maybe it's not terrible. The 15-minute ADMA is catching up at around 10:30. The timing on that is perfect. And then you get fantastic upside continuation and upside grind here. So I'd be looking at this and I would not be happy this kind of downward channel that starts coming in here. It's not what you want. You know, off of this candle, off of this tail, you're in this thing. It's looking pretty good here. You want to see it kind of hold this wedge and then very early break up and get, you know, kind of give you further upside momentum. And just to repeat myself, it's not what it's doing. It's grinding down. The market's breaking down. I'm going to be like, oh man, I'm probably getting stopped out of this. I'm losing my risk. But you got to stick with the trade. Because you buy the ticket, take the ride. That's kind of what we preach. It's too easy to convince yourself to get out of positions. And if you gave it to the stop loss, well, this just became a 15-minute correction because the market got pretty bad. The market bounced back and then stabilized, and this thing actually resumed the relative strength that it had this morning. And there were some rumors that, I already can't remember, someone was taking a look at potentially buying this thing. I think it was Hewlett-Packard, right? Hewlett-Packard Enterprises. And then, yeah, it worked great. So I hope you caught that move. But is there anything I look at on a consolidation, or whether it's bullish or bearish? Usually just kind of the spacing of it. Like this, if you're calling this a consolidation, I don't even really call it that. I call it more of a price correction. Consolidation is more of a time correction. So this price correction would just absolutely be concerning me. And I would not view this as particularly bullish. But again, I guess if you're looking at it in relation to like what the Qs were doing at 10 o'clock, you're like, you know what, this is pulling back, but it's relatively strong and it's not the end of the world. So I guess to directly answer your question, I'm looking at how it's trading versus the market when you're getting that price and time correction. And if it's acting strong like it was in this case, it's not the end of the world. It's actually what you want to see. If that market could ever stabilize, it could be a good trade. If the market just continued to deteriorate, this trade was going to stop you out. You know, the second would be location. Like, again, looking at this chart in a vacuum, I don't love what this looks like. I would want this consolidation just to be broader up here, going sideways, let those moving averages catch up, and then you get continuation. Yes. Good stuff, and I like that you're holding this overnight. Closed well, daily chart looks great, market is bullish. Really good stuff, and I'm glad you were involved in it. Great job, Mike. From Scott. By the way, thanks for looking at Target this morning. Off your comments, I shorted instead of going long. Okay, yeah, nice. Target really weak. This is my least favorite in this space right now, just off that earnings report. Though I don't like Dollar General and Dollar Tree either. I guess they're a little bit different. Walmart's where the strength is. Walmart had an actual decent day again. Macy's is still in this consolidation. That's got some strength. Oh man, what's that other one? I'm forgetful today. There's another one that we looked at in the morning meeting that had a really solid bullish consolidation also. So good job, Scott. Good job being flexible and making money on the short side in Target. From Galena, it's not a silly question. It's a great question. When do you add to your position? Cool. So I got a couple of videos on my YouTube channel about that if you ever want to check those out. But happy to answer it here as well. But also going to use it as an opportunity to give the YouTube channel a plug. If people are not subscribed to it, give it a subscribe because it helps me and I appreciate it. The first thing when we're talking about adding to a position, I always want to really differentiate two concepts. The concept of adding versus the concept of adding back, okay? Adding back is something I do all the time in my positions for cash flow. And as a matter of fact, in a firm today that Elliot kind of communicated in the morning meeting and I ended up getting involved in, that trade really ended up failing and stopping me out. And I was able to make money in it, and that was because I was selling and then adding back and selling and adding back, and I was able to do it 3 different times here. I bought 14.20, I sold around 14.50. I rebought this pullback. I think I got 14.25 or 14.26, and then I was able to sell again at 14.50. I did it 3 times. I bought around 14 quarter and sold around 14.50 3 different times, and then it stopped me out. But those were always add backs as opposed to adds. What's the difference? Adding back is when you take back risk that you already had on Adding is taking on new risk. Okay? So a lot of my approach to trading is based on this concept of putting yourself in a win-win situation. When are you in a win-win situation? Is once your worst case scenario is 0. Because whenever you're putting a trade on, you're inherently assuming risk. But if you sell 50% of your position at 1-to-1 on the risk that you put on, as an example, and I do that a lot, your worst case scenario, if the position comes down and stops you out, is now 0, right? So now you're in a win-win situation. So that's goal number 1. Get yourself in that win-win situation. Then you have this extra stock from the win-win situation, the other 50% of your position. And that's the stock that you really need to focus on making money with, okay? The selling your initial stock that you're selling just to get the risk covered is not about making money. It's about managing risk. It enables you to be wrong over and over and over and over again and potentially never lose money from it. And then you just get one great winner every once in a while, and bam, just like that, you're making money. And a lot of trading really is just the math game. So that other stock, what do you do with it? That's a stock that you generally want to be more greedy with, and that you want to be able to hold for those bigger moves to be able to make more money for yourself. So some of it I want to hold for that big move, but some of it I also kind of do, especially if I've got a large amount of size, what I call like this kind of cash flow trading, where you know, if the stock gives a big move, it gets a little bit extended, whatever, you take some off into that extension with the idea of like rebuying the pullback. That's an add back, right? You're just resuming the risk that you had, plus keeping the difference. So let me try to put some numbers behind it so that we can understand. I'll try to make a simple case here. Let's say you buy a breakout through $50. Let's say it's 10 cents worth of risk. Your stop loss is at $49.90. Assume no slippage or anything like that for the moment. You got 10 cents worth of risk. You bought 1,000 shares, okay? So you're risking $100 in the trade, right? 1,000 shares purchased at $50. Stop loss is at $49.90. You assuming the stock begins to work out for you, you sell 500 shares at $50.10. So you just put $50 in your pocket. You still have 500 shares open. If that 500 shares goes all the way down to $49.90 and stops you out, you get stopped out. You made 10 cents on 500 shares. You lost 10 cents on 500 shares, and you're out of donut. Now you got this other 500 shares. What are you going to do with it? You want to be greedy. You don't want to just get out of all that position, right? You want to hold some. You want the stock to trend. Obviously, part of what you're assessing is this a counter trend trade? Is this a with trend trade? Generally, with trend trades have higher reward profiles than counter trend trades. So how greedy I am on that other 500 shares in this case does depend on a game plan, and that game plan is going to stem from whether or not it's a with trend trade or a counter trend trade. I will be less greedy on profit taking on a counter trend trade, like when I shorted GOLD today. That was a counter trend trade, stock was extended, or if anybody shorted the market at highs when we called that out, that was a counter trend trade. The market's extended, but the market's strong. You're just looking for a technical retracement lower to be able to book profit off of that. You're going to be less greedy in that. But anyway, let's just assume this is a with trend trade, because breakouts typically are with trend trades, and you got this other 500 shares. It gives this really big move up to 50-50, and it gets extended up there. And you sell 100 shares, okay, because of the extension. And now it comes back down to 50-quarter, and you repurchase that 100 shares. That's an add back. You're just taking the risk back. You're back to the original 500 shares that you had. Right, you sold 100 at 50-50, and you're down to 400 shares. It was extended up there. Now it pulls back that 25 cents. You rebuy it at 50.25. You're back to your 500 shares, and now let's assume the thing fails. It goes all the way down. You get stopped out at 49.90. Your other 500 shares. You're not at a zero like you were last time. You made $25 on the trade, right? You reassumed the initial risk that you put on, but with putting 25 cents on 100 shares or $25 in your pocket by selling there and adding back. I do stuff like that all day, every day. And that's a lot of like adding cash flow into my trading on kind of what I'm doing. That's an add back. An add means that you are assuming on additional risk. So the only times that I ever do adds are when a new trade comes along. So for me, that might as well be an entirely different stock. I'm long through the $50 breakout, that 500 shares. It gets up to 50-50, and it builds out a bull flag between 50-50 and 50-40. The moving averages catch up. I buy the break of the bull flag. I buy 50-50, the break of the bull flag. I put my stop loss at 50-40, the low of the bull flag. And I bought 1,000 shares, 10 cents risk. I'm assuming $100 worth of risk. That's an ad, but it's an entirely new trade. So now let's say the stock pulls back to 50-30. I get stopped out of that 1,000 share ad that I took on the bull flag. I lose $100 on that. I still have my original 500 shares. I'm not going to let the new trade and the new risk negatively impact the working trade. In my brain, and again, the way that the front-end software does kind of the accounting, you might be thinking that you messed up your average price or something like that. Don't think about it like that. These are two completely separate trades, and the accounting math is going to work the same either way. You have trade number one where you're in a win-win situation. You got trade number two where you just lost $100. You still have 500 shares left from trade number one to be able to pay you. That's an ad. The only other way that I add, and this will be built into the game plan before I initially enter the position, is in the capacity of like averaging down, which I'll do also. Let's just use another simple example. Say you're going short off $50 because it was a resistance level. I might have multiple entries on that short. I might short, some at, 49.80, short some more at, 49.88, short some more at, 49.95, with my stop loss being at 50. But that was game planned into the trade already, even to begin with. Like, that 49.80, I'm paying down 20 cents on that. Maybe that's a lot, maybe it's not. Obviously depends on the stock. So I might just want to have a little stock there, even though I'm paying. It's like when I did that in Woof yesterday. If you remember, pre-market, it was trading really well on the earnings report. It was up at $11. And I think I wrote into the chat, or I said into the VTF, I was like, I really want to be in this Woof because I think that they could squeeze this thing, but I really don't want this price. But then I was like, you know what? I'm just going to buy a little bit as a feeler so I have it on my book. So I started by buying a little bit of Woof at like $11 pre-market. That's above the high of the day when this thing actually opens, right? In hindsight, that was a terrible price, and I probably was a little bit too aggressive, but I knew it. I knew it was a bad price. I knew it was aggressive. That's why I did it with very small stock, because I had a game plan to add. So I held it all the way down through, this initial low here at $10.23, and this low here at $10.18. My initial stop loss on this thing was going to be, I think, 10.10. It was this high, yeah, 10.10. So 10.09 basically was my stop loss. This is a $10 stock that I initially risked 90 cents on. That's not good, right? You don't want to do that. But I just wanted to have a little bit of it in case they squeeze the heck out of that thing. I just kind of wanted to have it on my book. But I had a plan to take more stock. And there I'm kind of like averaging down, and you could say that that's an ad, but it's really kind of built into the game plan on how much I wanted to risk to begin with on this thing versus that like $10.10. So those are all the different ways in which you can kind of add back or adding as a new position, or adding because you're averaging kind of down on the position. The term averaging down is a term that we want to be very careful about in trading, because averaging down aggressively and without a stop loss and without risk management in place is a fantastic way to lose all of your money in a really short period of time. When we talk about averaging down, we need to understand that we're averaging down like in front of a stop loss, that we know what the dollar risk is on that, and we're not just coming in and averaging down to zero and hoping that the trade is going to be able to work for you, unless you've game planned to average down to zero, which sometimes we might do in a cheap stock. They're not necessarily recommended. So I hope that helps. Gap from Jerry, GPS. Yeah, that's the other daily chart. Cool. Good question. Russell, MSOS What long scenario would be best to look for tomorrow? Hope you're not too late on it. So I was off the desk around 3:30 briefly because I had to step into a quick meeting. I missed whatever news this was. I don't know what happened here. I don't know when we got into the VTF. I don't know if we got into the VTF early or not. Usually we get stuff into the VTF very early. My initial thought process is that you missed the trade. They could certainly squeeze this up to $14, but you really want to try to have a price, I think, initially of like no worse than $12.20 on this thing. It's just a lot to pay up to potentially chase tomorrow. So if you're looking to get in tomorrow and you're not already in, it's the exact same situation that we had for the entire market today. Like coming into today, we were like, all right, this price, shorting is a little bit difficult. We can get further continuation to 412 potentially pretty easily for the market today. We'd rather be long than be short, but we're going to have a worse risk reward and lower probability of success in any longs that we get in today versus the longs that we got in yesterday. It's just going to be the exact same thing. This thing gave a massive day one on news. It's up huge on it. Could it work its way up to $14 or even more? Yeah, absolutely it could. Especially if they're legal. Like, this is what I like. Forget about CGC and Tilray and those names, Kronos. MSOS is the one to be long, I think, on federal legalization of marijuana. Because this is the American companies, not the Canadian companies. I still, to this day, I've been saying this since the IPOs, I don't understand the benefit of a Canadian company for federal legalization in the United States. But this is an ETF that's made up of U.S. companies, which is interesting because it must be an ETF of pink sheets somehow, because I don't think that there really are any U.S. companies that are listed. Maybe like lead maps or something like that, but they don't like actually sell the drugs, right? They just like show you where it is. So yeah, I mean, tomorrow you want to look for a day two, see how the thing gaps. You got to just look for intraday execution on it and just recognize that you have a worse risk reward and lower probability of success on the positions that you get involved in with it tomorrow. From Zachary, do you trade different if you were somehow only trading one stock at a time? I haven't tried being in multiple positions yet. I don't think you trade differently. I think that it's the same thing. You're just trading with multiple stocks at once. So you have to be able to manage multiple stocks at once. When I was a newer trader, which, you know, I guess you are, I had a rule for myself when I was a new trader that I wouldn't be in more than 3 stocks at a time because I just couldn't handle it. Once I was in more than 3 stocks at a time, I just couldn't handle it. I wouldn't be able to manage them properly. I would make mistakes. Those mistakes would negatively impact my P&L. Now I can be in 25 positions at a time with no problem, be able to manage them all correctly and trade them and not really make any mistakes. So yeah, learn to expand outside the box. I don't really do anything different. At a certain point though, when you start having a lot of positions on, like maybe not 3 positions, but like 10 plus positions, you do got to think a little bit about your overall like kind of portfolio risk that you have on, which is something I'm constant. That's why I didn't keep Roblox overnight. I just didn't want to add the long exposure to my like overall long portfolio of long swings that I'm still in. And that's even after I've gotten out of Meta and Microsoft and Pins and Shop and I think a couple others. So yeah, it's the same thing that I always talk about, where you have to always know your worst case scenario. You're in 3 positions now, you're in 5 positions now, you're in 15 positions now instead of being in 1 position. So if the entire market rolls over right now and every one of those positions is long, sure, maybe you got a little diversification, but it doesn't matter how relatively strong your stock is if the entire market's getting destroyed. Correlations increase and everything's going to end up hurting you. So you got to understand that. And you probably have a little bit less risk if you got shorts on and longs on at the same time. But don't think for a second, because it's happened to me, that if you got 5 longs on and 5 shorts on, that you can't find yourself in a scenario where your 5 longs all go down and your 5 shorts all go up. Because I've certainly had that one happen to me also. Even in that case where that's obviously going to be much lower probability, 5 longs and 5 shorts and they all go against you, as opposed to 10 longs and they all go against you. It's much lower probability of that first scenario happening. Still, you should be prepared for it happening. It still can happen, especially on like a choppy sideways day where, you know, maybe today you were short growth stocks and long banks, and you're just getting hit on both sides off the open. The banks are selling off and growth stocks are squeezing up. So I hope that helps. From Hemming, can I talk about snow and why I pivoted yesterday after market? Any thoughts about it? I really don't have any thoughts for you on this one. I really did not look at the earnings report very closely at all. I don't know what the numbers were. I don't know what they look like. I thought maybe it was initially a miss and it was trading down, but I really didn't look at it very closely. I have no idea why it changed and why it fully reversed. A lot of times, and I'm just speaking very broadly because I have no idea what happened with the snow today, a lot of times when you see something like this, it can be related to the conference call. Numbers hit, market, the algorithms are like, we don't like these numbers, they trade the stock down, conference call starts, and they say something on the conference call that was not there in the initial announcement that the market loves, and they say this is even more important than what those numbers look like, or it makes us look at those initial numbers differently, and then they rip that stock all the way back up, like this case. So again, with snow specifically, I have no idea what happened. I'm speculating because that is something I've seen happen a lot of times in the past, where the conference call changes the story. So I hope that helps Lisa a little bit. All right, guys. Anything else for today? Otherwise, a little slower afternoon, even though some stocks are rocking and rolling. You want to make sure that you guys are trying to be involved in some of these things that are moving when the market is moving. You want to try to be involved in that Roblox or some of those other names. There was, even though today turned out to be a consolidation day, I think that there was actually a decent amount of good trading opportunity today, and there certainly was yesterday. So I'm always the first person to say, like, we had a few days here in this consolidation that were really tricky and there just was not much going on. I'm always the first person to be like, guys, we just don't have an edge right now, and you really should do less trading. But I'm going to say the opposite also. When the opportunities are really there, you got to be able to execute. You got to be able to be taking your trades, being in your positions, because that's the only way that you can make money in this business. A day like yesterday, you want to be active in that day. And even today, even though, again, you look at the indices and they just kind of stalled out and did nothing pretty much all afternoon, there was a lot of opportunity there. It was all day. There was opportunities with the short squeezes off the open, opportunity to the short side of the market here, some longing opportunity here for relatively strong stocks like that Netflix call out. And then even in here, I'm usually not a huge proponent of midday trading, but you had AMC trying to run, and I lost money in Carvana, but I wouldn't take the trade back. I thought it was a good trade that I was able to take. So, when the opportunity is there, you kind of have to go for it. So I'll wrap it up on that note. I hope everybody had a great day. We'll see how the market gaps tomorrow. Have a fantastic night, and I'll see you all then.